When you buy a house, there's not only the down payment, there's also closing costs. Many people have heard of the sellers paying it, or themselves paying it, but what about the lender paying it? In this video, I'm going to teach you about lender credits and how important they could be to your path to homeownership. When someone thinks of buying or refinancing a home, closing costs are one of the biggest things to consider. There's the interest rate that you're going to get on the mortgage, but there's also the cost that goes along with buying that house or refinancing that mortgage. Lender credits can play an instrumental role in minimizing those costs and unlocking potential to buy or refinance. Not many people have heard about lender credits. And as I dig into this a little bit deeper with you, you'll realize it goes against the grain of being a consumer. We're all programmed for the lowest rate. And in many cases, that lowest rate comes with closing costs. Lender credits is actually the opposite of taking the lowest rate. It's taking the lowest cost of the transaction in exchange for a slightly higher rate. You see, when you call a lender on any day and say, hey, what's your rate? The lender actually has about 20 different rates to offer everyone. Somewhere in the middle is what you would call the 0-point loan. You call up, you get the rate, you go to closing. If you go lower in interest rate, the lender will say, you need to give me money up front. If you give me a half a point, 1 point, $2,000, $4,000, I will improve your interest rate forever. The opposite of that is we, lender, give you money in exchange for a higher interest rate. But why would you really do that? There are many situations that we recommend lender credits. Probably the most common is the first-time homebuyer. They finally saved up enough money for their down payment, but they just don't have enough to cover all the closing costs. And in competitive markets, it's hard to find sellers that'll pay it for you. So lender credits is a great option. You accept a slightly higher rate, payment's a little higher, but you get that house. You're building equity. You're getting your family security. Another use of lender credits is for refinancing. So when you refinance, the biggest struggle is trying to outweigh the cost of the transaction to the savings. And I've always said if a refinance is free and you're saving money, you do it every time. Well, you can do that through using lender credits. Drop your interest rate, have the transaction be free, and go instantly into saving money. Now, before anyone takes a lender credit, you really do need to map out your goals, how long you're going to be in that property, and where are we in the interest rate cycle. If interest rates are falling, lender credits are a no-brainer. If interest rates are rising and you're moving in a couple years, keeping it as an investment property, you might just want that lower rate if you can pull it off. At the Downs Group of Vellum Mortgage, we really dig into all the details, everything that's specific to you and your goals with that property in that very specific moment in time, and try to help you map out the best possible path to home ownership.